It's Friday, the 8th of October 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Business in turmoil over mandating vaccinations and whether people should come back to the office. That's our main story today. Also this morning, the value of the local housing sector pushes beyond $9 trillion. The local KFC business goes global. And this is a good one, what teenagers are really doing. Then stay listening for Sean's chat to Tim Lawless from CoreLogic about what's happening in the property market. Can it keep going now that the regulators are stepping in? But first, Sean, there's something of a revolution going on in the workplace thanks to COVID. Companies are grappling with the new world. How much can people work from home? Can people come to the workplace if they're not inoculated? It seems that big business is finally making some calls about the future of work.
They sure are, Michael. It's very difficult for managers to know how to run their businesses, though there are some trends that are emerging. The no jab, no work policy definitely has momentum. Some businesses, such as the airlines and SPC, the manufacturer, have mandated vaccinations for staff. New South Wales teachers fall into that category as well, so too parts of the Telstra workforce. Much of the mining sector is insisting on vaccinations if workers want to attend sites. Earlier in the week, Western Australia said that all workers across the natural resources sector, so that's exploration, mining, oil and gas, must have their first jab by January 1 to help protect vulnerable Indigenous communities. Yesterday, BHP came out and said all workers on site have to be vaccinated from 31 January next year. Others, particularly in the service economy, such as lawyers and accountants, have told people not to come into the office or visit clients if they're not double jabbed. That's not mandating vaccinations, but it makes it very hard to do your job if you're not. Then there are other companies that just don't care if people come into the office at all. Yesterday, Thrive Australia, which used to be known as Census, told its 500 staff to work from home permanently. It's closing down its main office in Melbourne. Deloitte have told staff to make their own arrangements around when they head back to the office and the hours they work. There are plenty of other examples.
Geez, there's plenty of implications about what this means for companies.
Sure is. How do you manage staff? Are they working efficiently? How do you create culture? How do you create teamwork? The head of Cisco in Australia recently argued that people were even more productive working from home because it cut down commute times. So there's certainly good and bad to it. There's also really big implications for the owners of the office towers in CBDs. Already they're faced with single-digit occupancy rates. We talked about that yesterday, and it would be a brave person to say they won't remain fairly empty unless they do some serious discounting. It's a brave new world out there for business.
It sure is. So how did markets perform yesterday?
Well, the S&P ASX 200 closed up 0.7% to finish at 7,257 points. Not a bad day. Westpac, National Australia Bank, ANZ and Macquarie Group all rose more than 1%. There's one missing there, Commonwealth Bank. It was flat. There's been an investment broker or two that's put out negative notes about the country's biggest company in recent days. Basically, they're saying that Commonwealth Bank is relatively expensive compared to its peers, and that's weighing on its share price at the moment. Fortescue was down nearly 2% yesterday, while the coal companies struggled on the back of an easing of price pressures in the energy sector. Tech stocks did well. Afterpay and Xero both ended up around 3%.
All right, what about global markets?
Well, Wall Street has been worried about negotiations to raise the debt ceiling in the US, but overnight, Democrats and Republicans did a deal. Also, the number of people filing new claims for unemployment benefits fell. Both pieces of information triggered a surge in equities, with the three main indices, the Dow Jones Industrial Average, the S&P 500 and the tech-heavy Nasdaq, up around 1.3% in early afternoon trading. European markets also rose on the debt ceiling announcement. The Aussie dollar pushed back above 73 US cents overnight. Brent crude was a touch higher and gold was a touch lower.
We'll be back in a moment with the rest of the day's business news. Sean, the Prime Minister, Scott Morrison, has said New South Wales is a sign of hope to the nation after hitting the 70% full inoculation rate.
He did. New South Wales, as we know, will open up on Monday, and the new Premier Dominic Perrottet yesterday made even greater concessions to already announced plans, giving the state has now achieved the 70% vax rates. Students will go back to school earlier, great news, while caps have been increased on household visitors, outdoor gatherings, weddings and funerals. The rules have also been relaxed once an 80% vaccination rate is hit, and that's expected in about a fortnight. The state announced 587 cases yesterday and 8 deaths. Just quickly, Michael, running through the other states, Victoria announced 1,638 cases yesterday. Melbourne's northern suburbs undoubtedly is the epicentre of the outbreak, with more than 40% of active cases in that region. The numbers out of the ACT are accelerating, with 41 new cases yesterday. One was an infant. That's worrying. Incredibly, though, the one jab rate for people 12 years and older in the territory is now more than 96%. There are no new cases in Queensland, and the state government is floating the idea of home quarantine for returning residents.
All right. Now, Sean, this is pretty incredible. I mentioned it at the start of the show. The value of the Australian housing market has pushed beyond $9 trillion.
It's actually too hard to get your head around. That's 3 times the size of all the superannuation market in Australia. I mean, it really demonstrates how important the property market is to wealth in Australia and how people feel. In fact, the value of real estate is more than the value of superannuation, the ASX, all the listed companies, and all the commercial real estate, and that includes all the office towers around the country, combined. According to CoreLogic, the total value of residential real estate is now $9.1 trillion, up $1 trillion in just 5 months. New South Wales accounts for about 40% of it, Victoria's at 28% of it, and Queensland around 15% of it.
And of course, don't forget to stay listening after the show today for Sean's chat to CoreLogic's Tim Lawless. Now, KFC franchisee in Australia, Collins Foods, will now run the fast food outlet in the Netherlands after signing a deal with the US-based KFC owner, Yum Brands. That's Yum with an exclamation mark, so I should have probably sounded a bit more excited when I said it.
Perhaps. It's a great spelling, Y-U-M exclamation mark. Anyway, Collins Foods has done that deal, and that was enough to send its share price up more than 6% yesterday, closing at a record level. Interesting company. It owns 3 brands: Sizzler, which you don't hear much about, Taco Bell, which increasingly you do, and KFC, which of course is its biggest franchise. It's spent money in recent years sponsoring the Australian cricket team, ploughed money into advertising. Go on, say it. Shut up and take my money. And its share price is up 5-fold over the past 7 years. It has a small operation in Germany, which hasn't been particularly successful. But wow, KFC Australia's done well. Last financial year, earnings rose by more than 20%. And now it's done this deal. Of course, Australia has a bit of a reputation for shifting overseas. Domino's Pizza Enterprises is a great example. The local company has the franchise rights for Australia, Japan, and big chunks of Europe. And the majority of Domino's growth has come from running Domino stores overseas, not Australia. It'll be really fascinating to see how Collins goes.
Yeah, certainly will be. You mentioned there, Sean, Sizzler being one of the 3 brands that Collins Foods owns. I think the last Sizzler actually closed last year in Australia. And I, for one, am still in mourning over the loss of the cheese toast. Do you remember that?
I do remember the cheese toast. In my country town, a Sizzler opened just as I was about 18, and it was a place to go.
Oh, that's prime time for Sizzler. That's fantastic.
Yeah, I'll hold a soft spot for that.
Oh, absolutely. Speaking of teenagers, Sean, I love this story this morning from investment bank Piper Sandler. For 42 years now, it's been surveying US teenagers. And the idea is that if you understand the patterns of teen consumption, you'll get a pretty good insight into future spending patterns. Makes sense, I suppose. The survey was released yesterday.
This is held in really high regard in the US. Now, I appreciate it is an American survey, but much of it is applicable in Australia as well. People look at this survey and actually make decisions about how they're going to build businesses. Now, let me go through some of the key findings. I want to know, Michael, whether you agree with them. The number one item to spend money on if you're a teenager is clothing. That's the first time it's hit that number since 2014. It used to be food. And they're spending less on video games and personal care. But if they are watching videos, it's most likely to be on Netflix, followed by YouTube. They're also quite aware of social issues, with the environment number 1 and racial equity number 2. Snapchat is still the number 1 social media platform, followed by TikTok and Instagram. Nike is the number 1 apparel brand and the number 1 footwear brand. That company has done a great job staying in that place for many, many years. And teenagers like to pay in cash. Apple isn't just the number 1 smartphone brand, it's also the number 1 watch brand among teens. And Michael, the biggest shock of them all. Guess who their favourite celebrity is?
Oh, some influencer, I suppose.
Adam Sandler.
No.
Adam Sandler's, he's older than me, and that's their favourite celebrity. But, I mean, you were sort of half right because their favourite influencer is Emma Chamberlain, unseating David Dobrik. Now, if you don't know who they are, Google those last two, but they're YouTube stars, those two.
I am Googling them as you say it. I have never heard of either of them. But do you know they have a net worth of around $15 to $25 million?
Yes. I have older children than you do, and I asked my 14-year-old, who's Emma Chamberlain, who's David Dobrik, and he just looked at me like I was an idiot. And I said, but do you know who Adam Sandler is? And he laughed at me. He said, yeah, he's in all sorts of movies. He explained to me who Adam Sandler was. There you go.
Oh, fantastic. I think Happy Gilmore would be one of the greatest films of all time. Billy Madison also up there.
Happy Gilmore was made 25 years ago.
Really?
25 years ago, and teenagers who weren't born there, obviously, still love Adam Sandler.
Yep. What's not to love? All right, Sean, what's making headlines in today's news media?
The AFR is reporting that 1 in 3 tourism operators are likely to sell their businesses by Christmas and exit the $50 billion industry, according to the Tourism and Transport Forum. The same outlet is reporting that thousands of delivery drivers will stop work across the country unless their employees agree to restrictions on outsourcing. The drivers come from Star Trek, FedEx, Toll, Linfox and BevChain. And this morning, there are several stories about Qantas completing its record-breaking repatriation flight, carrying 128 people, more than 15,000 kilometres, Michael, from Buenos Aires to Darwin, non-stop. The flight took 17 hours and 25 minutes.
Running through some of the other stories around today, the Prime Minister has backed Barnaby Joyce's concerns about anonymous defamation on social media, saying the government was leaning further into the issue.
Michael, I've got to jump in.
Go on.
Scott Morrison said leaning further into the issue. What the hell does that mean? Sorry, I digress. Keep
Scott
going.
Morrison is now a millennial. He's using buzzwords.
Anyway, he has a good point in this one.
He does. He does indeed. And he went on to say that cowards who go anonymously on social media and vilify people, harass them, bully them, engage in defamatory statements need to be held responsible. And I think we'd all agree with that.
Fair call. Wesfarmers is in a battle with Sigma Healthcare to purchase Australian pharmaceutical industries. Now, Sigma's bid is higher, but Wesfarmers has the right, which it exercised yesterday, to buy Washington H. Soul Pattinson's 19% share of API. Both companies are doing due diligence on API at the moment.
Now, Sean, we said this would happen. Well, actually, you said this would happen and I just agreed with you. But ANZ, NAB and Westpac faced protest votes at their AGMs over the money lent to fossil fuel projects in the last financial year. The total is estimated at more than $800 million. And environmental group Market Forces has lodged resolutions with the three, calling for a commitment to stop funding fossil fuel growth projects.
Plenty of that in the next couple of months, I think. The competition watchdog is looking into logistics group Cube's purchase of the grain export hub at Newcastle in New South Wales, a very strategic asset. Cube bought the hub for $90 million, but the Australian Competition and Consumer Commission yesterday said it hadn't had time to consider the ramifications of the deal before it was done. The problem for Cube here, Michael, is that the ACCC had asked it to delay the completion of the deal. It said it couldn't, and now the watchdog is not very happy.
And one more, the Bureau of Statistics released data yesterday that showed that payroll jobs through July, August and September fell back below their pre-pandemic level, all thanks to the lockdowns in New South Wales, Victoria and the ACT. Capital cities have been hit hardest, and the sector most affected, not surprisingly, is arts and recreation services. Now, Sean, what's the key overseas news this morning?
Well, the United States and China have agreed, in principle at least, for their presidents to hold a virtual meeting before the end of the year, after discussions between authorities in Switzerland. Remember, the authorities spoke in Alaska last March and actually came to loggerheads and walked away from it. Hopefully this meeting will go ahead. It would be the first face-to-face meeting for the two and might help end the trade stalemate going on at the moment. A new study by medical journal Pediatrics says around 120,000 children have lost a parent or grandparent in the US because of COVID, who is a primary provider of financial support and care. And most affected are Afro-Americans and Hispanics. What a horror statistic.
Yeah, awful. All right, now up next is the daily interview, and I mentioned this earlier, a couple of times now, in fact. You're talking to Tim Lawless from CoreLogic, who is possibly the most well-informed property expert in the country.
And he lives in Noosa in Queensland, so he sits there and looks at the property market around the country. He's great, Tim. He runs down what he thinks will happen to prices going forward, how he thinks changes from regulators that announced in the last couple of days will impact the market. Well worth a listen.
Yeah, it's a good one. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Have a great day, Michael.
It's Friday, the 8th of October, 2021. Make sure you're following the podcast. Join us online on Facebook, Twitter and LinkedIn, and sign up for our free daily newsletter at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.